Hi guys. Thanks for taking the time to listen to me. I've got a short presentation where I'm going to talk about several things about, I suppose, bringing people up to speed on what happened in Steinhoff for those who don't know, what it means about the wider whole, whether it's kind of indicative of a wider malaise in the South African corporate sector. And then it'd be great to answer any questions you guys have or talk about the issues that you think are more relevant, I think. So let me just start off with the presentation. I mean, I suppose my background is that I studied law and I did 2 weeks of articles. I figured that was enough time, more than enough time to know I didn't want to do it. So then I skipped out and did journalism, and it's been fun. I mean, primarily for the last 20 years or so, I've focused on, that gray line between what companies say they're going to do and what they actually do. I find that far more fascinating than many other elements of the corporate sector. And so along the way, I've encountered some wonderful people who you might know, people like Brett Kebbel, for example, J. Arthur Brown, a lot of people who've done very bad things. And it always intrigued me why people do these kind of things. My experience with Steinhoff began in 2009. I wrote about one of the takeovers that they did, where they didn't part with any cash. And I thought it was an intriguing business model and raised questions to me about what Steinhoff was actually doing. It used paper to do all these deals. And then in 2011, I managed to get hold of some court papers in which Marcus Jooste was being tackled by SARS for about 200 million rand. And I thought it was really fascinating because this guy earned a salary from Steinhoff, but it was a retailer, it wasn't a massive salary. So all of a sudden he's being assessed for 200 million rand in back taxes. And how did this happen? So I looked into the papers and found that there was this related party deal in which he had essentially bought the forests in Knysna and sold it to the company, forests that Steinhoff was going to buy and decided they didn't want to buy. And a year later, all of a sudden, Marcus turns out to be the owner, then sells it to the company. The forest that he'd bought for 11 million the first year sells it to the company for 149 million the next. And it was an undisclosed related party deal. And when I asked the company about it, they said, well, we asked Marcus and he said it wasn't a related party deal. So, we left it at that. So I thought this is fascinating. And if these kind of deals are happening on the surface, then we can see what else is happening below the surface, what other shenanigans are taking place. After that, I wrote about Steinhoff's takeover of Pepkor in 2014 and some shenanigans around that, the kind of purchasing of shares beforehand. And then in 2017, Steinhoff collapsed, and my wife works at Bloomberg, and we both looked at each other at the time and thought, well, that surprises nobody. But I think that the people who tell you that they saw everything was happening at Steinhoff and knew what was going on and knew it was this giant scam all along, that's clearly not true. I mean, nobody saw the entire scale of the deception, just as nobody saw the entire scale of the deception at Tongaat Hulett, at Enron, or any of these big disasters. You have a sense that a few things are wrong. And in the slide presentation, I talk about a couple of red flags I think I saw and others flagged. But you don't have a sense of exactly what went wrong. For example, we did not know about how he was using these German instruments to fiddle the cash flows. We had no idea, obviously, of the messages he was sending to his friends, telling them to sell the shares. That's the kind of thing that comes out later. So you have a sense of intuition that something is wrong at the company, but you'll never have the bigger picture. With that background, I mean, I think I'll just share the presentation that I've got. And I'll start at the beginning, which I should have been at the beginning. So in the context of it, I mean, Steinhoff was the equivalent of Enron for South Africa. It was one of the largest companies on our stock exchange. And this was a comparison made by Heather Son and Christo Visser after it collapsed. But it came amid a global ramp-up of similar, overseas you saw Wirecard and Theranos. In South Africa, you see EOH, Tongaat Hulett, VBS, various others. And I suppose it does suggest that there is something going on that has led to this kind of thing. In the South African context, the impression I got from Steinhoff is that there might have been many other Steinhoffs taking place. What CEOs have done is they cut a corner this year, hoping to close the gaps the next year. But then the next year becomes tougher and isn't as benign an environment as they think. So then they're caught out. It's the Warren Buffett aphorism that's, when the tide goes out, you see you swimming naked. So there might have been so many other Steinhoffs we didn't see where they were able to close the gaps. But the really unrelenting environment in the last couple of years meant that Steinhoff wasn't able to close these gaps and wasn't able to cover up what was going wrong. By the way, that cartoon in the bottom left-hand corner is my all-time favorite. Daddy doesn't know magic tricks. Daddy knows accounting tricks. I think that is, I want to have that emblazoned on my gravestone when Marcus Jooste comes for me. What it meant for the country, I think, was really big. I think that we saw contagion on the JSE. We've seen a lot of companies talking about how they used to have audit committee meetings that would last an hour, and it's now lasting 3 hours. I think it's made non-executive directors and everyone very scared about not seeing certain things. Because certainly the case of Steinhoff illustrates that the problem you think is the big problem often isn't. And it often creeps up from a small risk that you don't think is that risky and is a very small immaterial part of the business. In this case, the big problems were happening in Europe. And they just didn't see it. The board of directors had these massive board packs, didn't see these problems happening in Europe. And when they did see them, they didn't do enough to investigate them. This is Nikki Newton-King talking about what it meant for the JSE. It certainly had an impact on the notion of South Africa's corporate governance and its audit standards. In the World Economic Forum rankings, we were at the top of the world for many years. People thought that we were these fantastic, exceptional country that managed to somehow escape the wider tide of immorality in the public sector and were able to produce these fantastic results because of these amazingly moral and upstanding executives, which it now turns out wasn't the case. So I think Nikki's sentiment is that, we had this reputation amongst emerging markets for the strongest ethical corporate standards. But I think this punctured that myth to some extent and made it realize that people are no longer the exceptional case that we thought we were. Steinhoff, I mean, this is essentially, for those who don't know what it is, Steinhoff began as a small retail firm. It merged with Bruno Steinhoff's company, which made furniture in Germany since 1960, listed on the JSE, and then went on this massive buying spree. And Marcus Jooste's goal was to become the next IKEA in Europe, and it did very well. It was the second largest furniture retailer in Europe. It bought a number of assets across the country. That graphic in the bottom right-hand corner shows you where they had assets. I mean, Poundland, for example, in the UK, Harvey's, Benson for beds. They bought Freedom in Australia, which was a massive deal. And in 2017, shortly before the collapse, they bought Mattress Firm, which turned out to be a very bad move. So essentially, they kept buying up all these assets. People didn't know the name Steinhoff, but they certainly knew a lot of the local retail brands. You knew Incredible Connection, for example. You knew Ackermans, and you certainly knew Pep. And Steinhoff's share price just kept going gradually up. That graph on the top left, you see what happened to it from about 2013 to 2017. It rose considerably there. And I think that's a time when institutions who invested pension money, asset managers, and certainly brokers would have been under immense pressure to buy shares in Steinhoff. The pressure that these asset managers felt, I've often heard from them talking about it, was literally such that they would have to go and explain almost every month why they hadn't bought shares in Steinhoff to investors who said, look, my mates have been benefiting from the Steinhoff ramp up and you guys have done nothing. What's the story here? And for those who've seen the Steinhoff documentary, the Steinheist documentary, you've seen Zweli from Benguela talk about this pressure. To some extent, to him, it was quite a relief when Steinhoff collapsed. He didn't have to keep defending himself against these claims. What actually caused this? I mean, in the discussions I had with a lot of people about Steinhoff, it seemed that there was a very strong mafia-like culture that revolved around Marcus Jooste. I think this quote is very instructive, that Steinhoff's culture consists of people who trust each other blind, essentially. We think alike, we operate alike. There was no different thinking there. Heather Son, the former chair of Steinhoff, told me at one point that every single person at the company was a chartered accountant. Which was just one particular line of thinking, that there was nobody who had any different thoughts on how to approach specific issues. And I think that lack of diversity in terms of thinking certainly contributed towards what happened here. What's interesting is that, as much as nobody saw the whole picture, there were some analysts who did see that there were problems with the company right from the beginning. One of them was JP Morgan. In 2006, they released a report to the investors saying that essentially Steinhoff's accounts don't add up. There are serious problems at Steinhoff, and it's just accounting shenanigans, and there's not much tangible in the company. And Steinhoff pretty much blew a fuse. JP Morgan's head of research and the analyst was summoned to Steinhoff's headquarters, where they were given a complete dressing down by the chair at the time and Marcus Jooste. And they stuck to their guns and refused to withdraw it. But it certainly meant that in Steinhoff's case, this was a giant company doing massive deals across the world. That JP Morgan was one of the few companies that didn't get advisory work from the company for a long time. So you can see the sort of pressure that is mounted on analysts at various companies to do this. The story I found quite compelling was of this analyst at Prudential, Craig Butters, who had worked at Prudential at the time, and he had previously worked at Brait. So he knew Christo Visser, who was the chair of Brait at the time. So in 2009, he asked Christo to come for a meeting with him at the one and only in Cape Town. And he presented him with a 42-page slide pack of why he shouldn't invest in Steinhoff. I think Craig saw that Christo was getting pretty close to Marcus Jooste and said, this is just a bad idea for you. It's not going to work out well, and there are issues with Steinhoff. I spoke to Craig for many years over various issues, and he would always talk about the issues at that company. The tax rates, for example, as you see in the bottom, were astoundingly low. And I think that there were, there's two reasons to interpret a tax rate like that. Either it's just incredibly fancy at structuring its tax, and I don't think that's entirely unlikely. Marcus Jooste did spend a while at SARS working there, as opposed to going to the army, which you did in the 80s. The other way in which you wouldn't have to pay taxes is if you aren't really making that level of profits that you say you are. So I think that was one of the warning signs that Craig presented to Christo and said, this is one of the reasons you shouldn't invest. He talked about how it essentially is making a net cash loss every year. And he compared it to Christo's other company, ShopRite, which was doing very well. And he compared it to the tangible NAV. If you strip out net asset value, if you strip out the value of brands and tangibles and trademarks and that sort of thing, ShopRite's tangible net asset value was going up every year. But Steinhoff's was actually dropping. And he said, this is a big sign. There's things going on here, that this supposed gain in value isn't as real as you think it is. Steinhoff at the time, you would think it had the most amazing board in the world. I mean, it certainly was one of the best boards on paper in the country. It had 3 accounting PhDs. This was a country that had the biggest accounting scandal in this country. So I think that the notion of having a board with assumed authority in that score just doesn't hold up. I mean, that's one of the elements I found particularly fascinating. These accounting PhDs didn't detect this immense fraud being conducted by Marcus Jooste over more than a decade, according to the eventual PwC forensic report. That figure there, 106 billion rand of fictitious and or regular transactions. Assets worth 246 billion rand had to be impaired. This was the finding from PwC after a year with hundreds of auditors combing through the accounts to find out what went wrong. Red flags 2, immense undisclosed related party deals. That Neisner deal I told you about was one such deal. There were other elements in which there were special purpose vehicles created, special companies created, in which Steinhoff's management had an interest that was undisclosed to everyone. So they would end up benefiting from deals in which properties or assets were swapped from company to company. And ultimately, in 2017, early 2017, there was a hedge fund in London that prepared a report saying that there are these immense off-balance sheet deals happening. I'm sure you guys know what an off-balance sheet deal is. Essentially, it's just these massive transactions taking place which affect the company's finances and liabilities, but aren't included in the company's financials that are presented to investors. This is pretty much what happened with Enron. I mean, Enron had massive amounts of billions of liabilities that weren't in the balance sheet. So investors had no clue just how risky the company was. And when Enron's accounts were restated by Arthur Andersen in 2001 or 2000, it led to the company collapsing, and it pretty much led to the end of Arthur Andersen. So, I mean, there were a couple of things that didn't match up. I mean, the lifestyle of the CEO didn't match what he was doing. I mean, like I said before, Marcus was earning a salary every year, but he was essentially the largest racehorse owner in the world, next to, I think, the Saudi Arabian king. And that's incredible. Where was he getting the money for this kind of thing? And I think that was a big red warning sign that a lot of people missed. Below that is a little table of various other red flags that I think a lot of companies have. This was actually in either the Portsea report or the Viceroy report, which came out but certainly the Portsea report came out a couple of months before Steinhoff collapsed. So had you seen this report before, this was a company that called a massive fraud at Steinhoff. And some investors who used that report, who saw that report, were able to then short the company and make a lot of money. And there were people who made money from it. I think Jean-Pierre Verster talks of how he made about 9 million rand shorting Steinhoff because he believed it was going to crash. I think, as you all know, shorting a share in a company is quite a risky thing to do, because you can see it's risky and you can see it might collapse, but you don't know when it's going to collapse. So a company can continue growing, the cliche goes, longer than you can remain solvent. But I think for those who took a short at the right time, they made big money from seeing Steinhoff collapse. One of the fascinating things that I thought was really intriguing was what was going on in the boardrooms in the week before Steinhoff collapsed. So when I wrote the book, I spent quite a while speaking to various people who were in the room, putting together a sketch of exactly how it happened. And I think this was the moment that Christo Wiese says he felt the chill down his spine when the auditors call him. This is a week before Steinhoff's accounts have to be signed and presented to the public. And Deloitte says, we're not going to sign off these financials. There are things going on, and we just don't think we can do it. Marcus Jooste hasn't answered our questions, and so then they say to Christo, we have reason to believe Steinhoff's management have been defrauding the company for many years. And Christo says, what are you talking about? You've been auditing the company for years. Why haven't you raised any of this? You guys can hear me fine, yeah?
Rob, all good, thank you.
Good. And that's the moment when he calls in Marcus Jooste into the room and says, these guys say that you've been defrauding the company, you haven't given them documents. And Marcus says, no, don't be crazy. They've had everything they needed. These guys are just too nervous. They're seeing ghosts in every corner, and this isn't true. But then he says, guys, just to make sure the auditors are really happy, I'm going to fly off to Germany and get the documents of this mattress firm, this mattress deal that we're doing, and bring them back. So he flies off to Germany on a Friday, says he'll be back on Monday morning. And actually, what he didn't tell anyone is that he was going there anyway, because he was the guest speaker at Bruno Steinhoff's birthday party. Anyway, he goes there, says he's come back with the documents, lands at the airport on Monday morning, says to Christo, I'm just going to have a shower and I'll be in the office now. I've got all the documents. And then he just never arrived. And, the directors, the lawyers, the auditors are all waiting at the Steinhoff office, and they're waiting for Marcus to bring all the evidence he needs. And Steve Boyson, who was the head of the audit committee at the time, he said, Marcus was used to communicate with him in Afrikaans. And the moment the penny dropped for him is when he suddenly started getting messages, SMSs and WhatsApps from Marcus in English. And he said, this is a bad sign. The guy never communicated with me in English, and it's clearly been lawyered. And then he said, then he knew that this was a bad moment. And then that night, Marcus just never arrived that whole day. And he sent the lawyer to meet Christo and said, Marcus is offering his resignation. Will you accept the resignation? And it was that night that Steinhoff put up the announcement saying there had been accounting irregularities found, and Marcus Jooste has resigned. And after that, the share price plummeted something like 86% in the next while. Ultimately, Steinhoff lost 98% of its value if you look at over 3 or 5 years. So this is an immense 200 billion rand destruction of value. And I think a lot of the directors at the company would look back and beat themselves up about what they might have missed at the time. And I think certainly for your particular audience, for you guys, it's a question of where does liability lie? How can you see this thing? And to what extent should you have seen this? And I think that is an interesting part to the story. As interesting as why somebody like Marcus Jooste would have masterminded such a thing in the first place. Where are we now? Steinhoff essentially has managed to survive somehow. It's still going on. It's settled legal claims of, I think they had 134 billion rand in legal claims against them, and they settled it for 31 billion. They've done pretty well. They've survived, and I think it's partly because of the exact circumstances we're in. We were in a low interest rate environment, so you were earning. PEP, for example, was a great company. You have some good brands that are earning, say, 10% a year, and if your debt is able to stay low, and you're paying interest on your debt of below 10%, you're able to keep your head above water. So it seems to have been a specific set of circumstances caused by the fact that they had great brands and the interest rates are very low. I think that if you look at the other companies that have been subjected to scandals like this, the Enrons, WorldComs, Masterbond, LeisureNet in South Africa, they haven't survived this. And I think that's partly because of the specific set of interest rate circumstances we have now. Steinhoff then lodged an 870 million rand claim against Marcus Jooste for salaries and bonuses over the years, and he's fighting that. Marcus Jooste was also found guilty by the Financial Sector Conduct Authority of insider trading for sending a message to his friends, 4 of his friends, a week before Steinhoff collapsed, saying you might want to consider getting out of the company and selling the shares. There's bad news coming from America, and now might be a good time to sell. Personally, I don't know why there hasn't been a case from prosecutors or the police on this score, because, if you look at the definition of insider trading, it's basically tipping someone off with inside knowledge that'll allow them to avoid a loss or make money. And if this doesn't meet the definition of that, certainly a prosecution of sorts, even if he isn't found guilty, I don't know what would. Certainly the FSCA seems to have found him guilty on that. But yet the NPA hasn't acted. What we have seen a few weeks ago that you guys might have seen is that there was attachment orders taken on the Lanzarote farm and various of his assets, including that house in Hermanus, where he's living at the moment. The fact that Lanzarote in the Western Cape, the wine farm, was secretly owned by him, according to various documents lodged by Steinhoff, is an indication of the kind of like subterfuge indulged in by this company for many, many years. Another thing that I think was really fascinating recently is that the Reserve Bank then acted against Berdine Odendaal, Marcus Jooste's supposed girlfriend, saying that she actually received 16.5 million rand from Marcus over many years, which was used to buy houses at Val de Vie. I think she had about 4 or 5 at one stage, a Ferrari worth 4 million, numerous polo ponies. Berdine has since thought this. She claims she needs 150,000 rand a month to survive. And the Reserve Bank has basically been giving her lots of money for legal fees and this 150,000 rand a month, which is, I suppose, quite a nice lifestyle if you can afford it. So, this to me was the interesting question. What did the directors know? What should they have known? And what did the institutional investors know? Guys like Alan Gray, Coronation. There was an interesting view from Simon Brown, I think, who spoke to me years ago about Steinhoff. He said when the share price was going up, everyone wanted a piece of it. And he said that there were 2 kinds of investors in Steinhoff. There were those who didn't understand what was happening at Steinhoff and just avoided the company entirely. And there were those who didn't understand it, but looked at the share price and thought, oh, what the hell, I'll invest anyway and see what happens. And I think that this illustrates what can happen if you follow that approach. There was a lot of pressure on analysts to be positive about the company. They would have sort of fancy results presentations that would last into the wee hours of the night with lots of whiskey and wine. And I think that it helped convince a lot of people who might have been on the fence otherwise. So, what the director should have known, I spoke quite a lot to many of the directors about this. And it's an interesting question because, Christo Wiese has quite a strong argument, I feel. He hears us the whole time, like, how did you not know? Half the people who speak to me about Steinhoff say that Christo must have known, come on. But he says, it's the silliest thing. Like, do people really think that he figured out this was a fraud and then wrote out a check for 59 billion rand? He also says that, this is an argument he makes often, is that it went through numerous other gatekeepers. And it went through auditors, the internal auditors, component auditors, which are the ones in Europe who looked at this. And there was a small audit firm in Europe who was handling Steinhoff. And Marcus resisted having Deloitte to do the entire audit and kept the European arm, where the bulk of the fraud was, in the hands of the small little firm in Germany that I visited recently. And I think that helped keep this thing under wraps. But it went through Deloitte as well, and it went through the risk committees of the various banks. And I think that is an argument he makes, that how could he have known when so many others didn't? It's a very difficult thing to say what you should have known and what you shouldn't have known. Certainly in Christo's case, he said that when the company was first raided in 2015 by the police in Germany, shortly before it listed on the Frankfurt Stock Exchange, it hired a law firm to investigate all these allegations, and they came up with this massive file this big, said there's nothing to it, it's an entire lie. Christo obviously had a massive stake in the company. So is it a situation where if you have a 20 billion rand stake in a company, you suffer from the form of cognitive bias where you want what you believe to be true and you're not really going to be sufficiently skeptical? I spoke to various governance analysts about it, and Mervyn King pretty much said, he thought it came down to the extent to which the directors and the non-executive directors specifically, whose job it is to be skeptical, were they sufficiently skeptical? And I suppose that's a question of fact. Did they see the red flags? Did they act on it? And did they do enough? And I think that there's something in that. But the view of Johan van Zyl, the former CEO of Sanlam, who I spoke to, is that ultimately, basically, the directors were just simply lied to. He said that the board meetings were quite robust. They went through every single document. They trawled through it. They scrutinized it. They put the directors on the spot, the executives on the spot. But ultimately, they were lied to. And this is an impression I get from speaking to people like Steve Boyson a lot, is that Marcus would reassure him constantly that the company was above board, that all the documents had been given to the auditors, that there was nothing outstanding. So Steve Boyson, in about August of 2017, a couple of months before collapsed, Deloitte sent them another letter saying, we haven't got these documents. And he says, he calls Marcus and he says, what's going on? I mean, I thought you gave these things to them. And Marcus says, yeah, I gave them a whole memory stick with all of this in. I don't know what's going on with these guys. They must have lost it. They're not paying attention. So they were lied to repeatedly. And I think that does create a sense that you can, you just push it out. And I think what Marcus Jooste was bargaining on is that Deloitte had signed the financials for so many years, and it would ask for documents. Perhaps it didn't get the documents, and ultimately it would have just signed off the December 2017 statements, and things would have gone ahead. And that hopefully he would have been able to close the holes of the previous year. That ultimately didn't happen. Before we get to Tongaat, I think it's interesting to talk about why this happened. I think that there was that element of it. It's a situation where you're hoping things are going to get better. So you are pushing the can down the road. Certainly the Steinhoff leaks, which was emails sent between the various people in Europe, and Marcus Jooste illustrated that he was trying to get money from a whole lot of those off-balance sheet companies in Europe to fill the gap in Steinhoff's financials. They'd had a pretty bad run with things like JD Group, which contained Joshua Door and a lot of those furniture retailers. So they'd made it this, they were trying to sell it, but there were holes in that side, and they were trying to fill the gap. And he demanded money, and the guys just said, you can't really do this kind of thing. But it does illustrate that he was hoping that things would get better. At Gibbs, I spoke to this guy who's one of the experts on corporate fraud, and I think he wrote this book, Edward Salters, called Why They Do It. And I think if in fraud month, it's a good book to read. And he interviews a whole lot of people who committed various frauds at companies about how they deceived themselves and how they rationalized it in their own minds. And in these discussions, he had some great insights from people like Gurney Madoff, the WorldCom guys. He said one thing that I thought was kind of fascinating. He said he saw basically not a failure of reasoning, but a failure of intuition. That is that a lot of these executives didn't see the harm associated with their actions at the time. He said the cognitive dissonance was striking. They saw no victim in what they did, and they rationalized their actions. And I think in this case, it's easy if you're running a company to say, well, I'm doing this for the shareholders. I'm protecting jobs. If we reveal this, then people might be axed. We have to close down divisions. So ultimately, this is in the best interest of the company. You don't really see the victim in this kind of thing. It does entail deceiving yourself, I think, to some extent. And this other quote from Sam Waxell, who was the biotech billionaire at WorldCom, who was convicted of insider trading. Insider trading seems to be a favorite of guys who like to bend the rules. Talking about his conviction, talking about it after the fact, Waxell said, I could sit there at the same time thinking I was the most honest CEO that ever lived. And yet simultaneously, I could glibly do something and rationalize it when I cut a corner. And I think that level of self-deception is something you see quite often. I don't think you start out in business like it. I think it's a series of cascading events. You cut a corner one day, the next day you're cutting 2 corners, and the next day you're shunting 106 billion rand into your financials. So I think that it's a continuum. You don't start off as this person. And I think that the glib explanations of good and evil don't do us any good here in terms of understanding how this happens. But that, for you guys who are interested in it, I can send you the name of it, but it's really a fascinating book to get a handle on why people do this kind of thing. Case of Tongaat Hulett. I spent a while down at Tongaat. I found it really fascinating what had happened there. But essentially, Tongaat had been off the radar for many years. One of the things I found particularly interesting is that, since 2014, and this thing pretty much collapsed in about 2017, 2018, there was no exco meetings. Peter Stadi, who'd been the CEO for something like more than 20 years, had essentially just called individuals, chatted with them, talked about individual divisions, but there was no exco meeting in which people were subject to all the things happening at the company and people could question what was happening. There was no real culture of questioning, of asking questions. It was one of deference to the CEO, which is the same thing you saw at Steinhoff, and you see it pretty much all these companies. Regal Treasury Bank, which collapsed in about 2002 in South Africa, had, I think the final finding from the governance report by the Reserve Bank was that Jeff Levenstein, who was the CEO at the time, and quote marks, confused corporate governance with thuggery. And I think that in many of these cases, you see these very strong, dominant individuals who control the flow of information, who don't incentivize people to ask questions, and are able to do it by dividing and conquering. You see this in the case with Deloitte and the other auditors at Steinhoff. Marcus clearly didn't want one auditor for the European operations and the South African operations and didn't want them to speak to each other. So that level of organizational dissonance really helped this kind of thing happen. Steinhoff was kind of different to Tongaat because it was quite a complicated thing and relied on various moving parts and having cash flow, fraud, and a lot of financial shenanigans. I mean, Tongaat, I got the impression, was a lot simpler. Essentially, they overvalued things like sugarcane roots and the value of cane in the ground, and it was relatively easy to see this to some extent because there was a low sugar which was also there at the time, and they had very different valuations of their organic assets like that. Land deals were backdated, expenses were capitalized, and essentially this kind of stuff just went on. I spoke to Peter Stadi, who was the former CEO at the time, who has since been arrested, and along with a couple of others for Tongaat. Interestingly, that also includes the auditor arrested in the case of Tongaat. But Peter Stadi didn't see anything wrong with what he'd done. He talked about how backdating land deals is just something that you do in business. You just backdate stuff occasionally. And interestingly, he told me that he was mentoring executives in state-owned enterprises. So I think that if you're looking for a sign where SAEs are perhaps not as great as they should be, it's an interesting thing to note. After Peter Stadi left, he was replaced by Gavin Hudson, and Gavin said that essentially this was a couple of years of doing exactly what we talked about, filling in holes. He said, rather than making reality your friend and telling people what the situation is, you cut a corner and pretty much hope that things will get better the next year. And I think that's what they did. Interestingly, at Tongaat, you had a similar situation to Steinhoff in that analysts at Investec had raised the flag, said it's time for Peter Stadi to go, and that the actual economic value added at Tongaat over the years wasn't what the company said, and it's essentially hadn't done what it promised for years. I don't think the analysts at Investec clearly had seen the extent of the problems, but they certainly raised the red flag, and this was ignored by many people, including, it seems, Tongaat's own audit committee and non-executive directors. In that case, too, Investec was bullied to some extent by the rest of the bank, and I think the analysts at some stage, they demanded he apologize to Peter Stadi for it, which looks terrible in retrospect. PwC again. PwC is apparently the company you call when you have a disaster at your company. PwC did this forensic investigation at Tongaat and spoke in the end of how there was this culture of deference and a lack of challenge, resulting in employees following instructions on accounting practices without questioning the basis for those practices. I think that the governance clearly at Tongaat was powerless for ages. There were no minutes taken, and there was just a real culture of fear, according to the people I speak to. And I think that contributed towards this. When Gavin took over, he tried to change that, but there was a strong culture of deferring to the CEO, which is quite difficult. Tongaat, as a lot of you will know, they've been trying to deal with their massive amounts of debt over the last couple of years since this happened. Unlike Steinhoff, they've had less luck, partly because they don't have pep in their stable, and they have the sugar industry, which has big structural problems with it. We're quite a high cost producer. People are able to export for far less than the cost it takes to produce a ton. So there are structural issues in the sugar industry which kind of mitigate against getting this company back on its feet. Not that it won't get back on its feet, but I think it'll be a lot trickier than Steinhoff at this particular moment, given that Steinhoff has something like 7 billion rand of debt. I spoke to some of the banks about it recently, and they said they're unconvinced about Tongaat's recovery plan, and they just don't seem convinced about the sugar markets. And I think that's one of those insidious consequences of all these corporate scandals in South Africa. You have a lack of trust, and I think that you see boards not trusting each other. You see meetings taking forever because audit committees are trawling through every last line. And I think that the banks and the funders just have less trust in our businesses and our companies. And I think that that's one of the consequences of these kind of scandals that isn't great for any of our companies. So, I wanted to say, is South African governance rotten? I mean, I don't think you can make those kind of statements. That clearly isn't true. You've had some terrible frauds. You've had Steinhoff, you've had Tongaat, you've had EOH, you've had VBS Mutual Bank, but it isn't this entirely rotten basket that we need to just tie up and throw in a lake. But accountability is key. Michael Katz, the chair of ENS, I was speaking to him about it, and he said that people need to fear that they can actually get caught and go to jail for this. And I think that is one of the things that comes out in Edward Saltus's book. Michael tells a story of how somebody came to his office for advice on how to structure a deal in about early years of the Zuma presidency. And he said to Michael, I want to do it like this. And what are your thoughts? And Michael said, well, you could do it like this. The only problem is it is basically illegal and contrary to the Companies Act. So no, you can't do it like that. This would be a Companies Act contravention. And the guy looked at him and he said, Michael, look around, mates. Look at South Africa today. You have Zuma, you have this stuff going on. Do people really care about Companies Act violations? So I think it's an illustration of the wider sense of fraying morality, affecting people in boardrooms and thinking that, well, people are getting away with everything. Nobody's ever held to account. Why should I care about this? Why should I ever be held to account for it? Nikki Newton-King, talking about this afterwards, said that this illustrates the role for the guardians of governance. She mentioned the press. I don't know why, but certainly analysts, certainly internal auditors, all the checks and balances should have been stronger. And I do think that it's put the focus on auditors. This, along with Wirecard, along with various other instances, have put the focus on auditors to say that auditors don't think that they detect fraud. They say it's not their job. But there's clearly an expectation in the public that they will do certainly more to detect fraud. And the investigation or the report by Byron in the UK, suggested that there is far more that auditors can do to raise alarm bells about potential fraud and flag potential fraud where it exists. I think auditors themselves are feeling under the gun too, since Gavin Kruger, I think the Deloitte auditor at Tongaat, has now been arrested and was in the dock along with Peter Stardy and a number of the Tongaat officials this year. I don't think many auditors thought that if they miss something at somewhere like Tongaat, they'll end up in the dock. But that's what happened here, and I think it'll be fascinating to see how that plays out, because certainly you would have to say an auditor, you can make an argument for negligence, but they wouldn't have been in on the scandal, in on the con, unlike at VBS Mutual Bank, where a KPMG official is alleged to have taken a bribe to look the other way. I think that's a completely different thing. Auditing negligence versus actual complicity it's a big difference. And I think it'll be really interesting for governance and for auditing to see where that particular case goes. And then I think, just as a last word, whatever you do, Christo Visser's view is probably accurate, that, there will be more Steinhoffs, there will be more Wirecards, there will be more scandals like this, because you close one gap, people will find another gap. I spent a while in the last couple of weeks speaking to numerous international speakers, this guy from Wharton Business School who's an expert in corruption, and a lot of the chairs and people who run JSE companies, about what we need to do. And they talk about, the culture, changing the culture to some extent, and making sure that we don't view this kind of thing as normalized. Getting away with corruption shouldn't be seen as something that is socially licensed. And in the corporate sector, I do think accountability and arrests for Steinhoff will happen, and I think that'll be a big move towards it. But in the wider society, it's still clearly we know we're close to that. I don't know if any of you guys read the story recently last week about the officials from driving schools in Mpumalanga protesting about being asked for a bribe to be increased from 1,700 Rand per license application, I suppose, to 2,000 Rand. The fact that the driving schools actually had a protest at the licensing center over this is staggering to me. And you see it at the with the corruption mafias too, where it's normalized now to expect a cut of a project, even if you add no value. And I think that it's resetting that culture and removing the social license for that kind of thing that will help deal with these kind of things across our wider society, and certainly in the corporate sector. The last slide on this, I don't know if it's useful, but I put down a couple of things that I think have been factors in various of the corporate frauds. Weird control structures where people have, there's one group of shareholders who has extra voting rights. ShopRite has this, Naspers has it, which is not to say those guys are frauds or dodgy, but it's a warning sign when you have control structures like this. A lot of the tech companies have this. Supposedly it's to help themselves avoid a takeover, and that's what Naspers argues. But it is a red flag that Dion Bosson, an old financial journalist who cracked the Tygon case years ago, would talk about. This is pretty much his list. Autocratic boss, Tongaat Hulett, Steinhoff, EOH, poor disclosure of what's actually happening. We saw that at Tygon, where there was a case where the investment company PSC, Guaranteed Growth, was secretly buying shares in Tygon to boost the share price, but refusing to reveal to investors how they were making money. Turns out they only really had shares in Tygon, which was a bit of a con and contrary to what people expected. Too good to be true, too much paper activity, which is one of the things that first tipped me off about Steinhoff. Deals that don't make much sense. Obviously, the mattress firm deal in 2017, where Steinhoff paid double the share price at the time, was a big red flag, and it certainly was a red flag to the hedge fund Portsea. Resignation of staff and auditors, that's an obvious one too. I saw this at Blue Financial, where auditors were resigning every couple of weeks, apparently. Oceana, you saw PwC resigning after being lent on by the management, and I think that's really worrying. Related party deals, and then obviously any closely aligned deals with politicians or links to politicians. EOH, for example, seemed like a disaster that was waiting to happen. And Bosasa wasn't a listed company, but it's clear that it wasn't all above board. So guys, that's pretty much what I wanted to say as a presentation. I ran through quite a lot of where we are and what I thought was kind of interesting at the time, but I'm really happy to discuss it further and drill down into things you think are more interesting. Yuri, I think you're actually on mute.
Hey, Rob.
Sorry, I should be unmuted. Jono, go for it.
Thanks, Yuri, and Rob, thank you. And firstly, if I may, just apologize for joining a little bit late. I had some technical issues this morning. So firstly, just thank you to you, Rob, for a very interesting session. And also, good morning and welcome to all the brokers. And I'm sorry that I missed you earlier at the start of the session. But Rob, a fascinating discussion, and it's always so great to hear you talk and just to kind of hear the detail around these these things are terrifying, as you say, to think that it's just so, well, it seems to be so systemic in society, this level of fraud and corruption. And so for us to, as risk managers, risk advisors, to be able to have a better idea, I guess, to, identify these things early on, and to try and raise the red flags when we see them, very, very helpful. And thank you again for that.
Sure,
Rob,
sure.
there were one or two questions in the chat box before everybody kind of leaves. If you don't mind, if I just kind of check on one or two of the questions that I saw, as everybody's just saying thank you for the presentation. There was a comment around sort of the management team.
I've also just one thing. I put my email address and cell phone number on there if anyone wants to talk about it or discuss it further, just in case anyone wants to chat.
Great, thank you, Rob. So there's one question just around the sort of management team involvement, as far as the Steinhoff issue was concerned, that the board suggested they were just lied to by the management team. At what stage do you foresee that prosecutions or allegations come against those management individuals involved in that lie?
Well, I think at this point, they want to prosecute anyone. I mean, the fact that this happened in 2017, and it's nearly 5 years since, and nobody has even been arrested, is really, it's very poor. So I think that if they get Marcus Jooste in the dock, then it would be a success. But ultimately, you want everyone who is complicit in it. And Steinhoff did in Parliament name 8 individuals who were part of this. That included people outside Steinhoff, as well as several officials in Steinhoff, both in Europe and in South Africa. So that there's at least one person who I understand has turned state witness or is helping the authorities decipher it. And I think that in this case, given how frail the NPA is and the prosecuting ability is, I think you need to have somebody inside who's able to say this is the mechanics of how it worked and testify against those individuals. But I think you do want to see culpability for all the people involved as much as possible. But at the very least, you want to see the person flagged as the mastermind by PwC account for this in court. I mean, it's still staggering that it's 5 years later and it hasn't happened. Yeah, absolutely. And another question just from Tammy, who just was asking about Deloitte and their involvement in having signed off on financials without identifying the shortcomings. Has this raised any concerns in any of the other companies that have been audited by Deloitte and or other auditors that have been implicated in other frauds? Well, Deloitte, interestingly, was also they must be feeling kind of quite besieged because they also were the auditor in Tongaat. In the case of Steinhoff, they settled. They paid a massive fee to Steinhoff, which Steinhoff included in its entire kitty, and then paid out to the victims, I suppose, or the shareholders and anyone who may put in legal claims against it. So Steinhoff is feeling. I mean, Deloitte is feeling a bit under siege, and there certainly will be accountability for them at the IRBA, the Regulatory Board for Auditors. There will surely be an investigation and a hearing. It's difficult to say to what extent they could have done more. I mean, the fact that Steinhoff was revealed in December 2017 was pretty much because Deloitte at that point, who had been alerted to what was going on. One of the stories I heard is that they received this anonymous box in Europe, in the Netherlands, and then thought, oh no, we got this incredibly wrong for years. They refused to sign off the financials in 2017. And, Krista and Marcus were right, that for years they had signed off these things. So why now? So as much as they did bear some culpability for what had gone before, I think it's a good thing that at some point they drew the line. Their argument is, we got these financials from Europe, and we didn't have to go into them. They were the component auditors. They gave us this. We provided the group accounts, and I think that holds to some extent, but not completely. I think there was a degree of, I wouldn't say looking the other way, but certainly they didn't do as much as they could have for a long time. But having said that, it is important to say that this thing wouldn't have been exposed probably, but for Deloitte finally drawing a line in the sand. Did.
Exactly. Yeah, good. I think that is all the questions that I could see from the chat.
I see there has been one or two more questions coming up. There's one from Dale Sutton-Price just asking, will Marcus Jooste get away with this, or can the NPA and SARS get their house in order?
I mean, it's interesting. I mean, certainly in this case, there have been court papers lodged by Steinhoff trying to reclaim 870 million rand from him, and they're very clear that there was a fraud. That they paid out bonuses and salary based upon what they thought were their accounts, and this just wasn't true. And this is based on the PwC report, and the PwC report has been handed to prosecutors, and the prosecutors are now working on this. In this particular case, a really disturbing intervention is that Steinhoff has actually paid for PwC to go and work for the National Prosecuting Authority on this. And they claim that there is a wall separating what PwC did from them, and they don't have any influence on the investigation. But that's a very disturbing sign with plenty of moral hazard implied, because if you as a company are essentially paying for an investigation into yourself, firstly, it implies that other companies who don't pay might not see any accountability for people who did wrong, and that's a bad sign in itself. Secondly, you have the potential to engineer or influence the investigation to some extent. I know Steinhoff says that isn't happening in this case, and they believe that it's very important for there to be accountability in this case, and they believe it is an exceptional rule. But if the NPA sees this as, this is how it should be, and companies should finance prosecutions into themselves, and those who don't, well, then too bad. It's back to a feral South Africa for the rest of you. That's not a good sign for anyone in the corporate sector. And I do think, we had, in the old days, you had Tygon's Gary Porritt being arrested in 2002, but he's yet to be found guilty. That was 20 years ago. The guy still hasn't been found guilty. Jeff Levenstein at Regal Bank did go to prison. J. Arthur Brown went to prison, but you do need guys to be held accountable for this and go to prison. And if you don't have proper forensic ability at the NPA, you need to hire it, because this is critical. This is critical for investment sentiment, that people are held accountable. Sorry to go off. I tend to.
Yeah. No, that's perfect. Perfect. One or two questions I just wanted to address quickly that I see were in the Q&A around the directors and officers liability insurance. So first question, was there any directors and officers liability insurance in place for the Steinhoff loss? And yes, there was. We don't have all the details, and obviously, any sort of agreed settlements are confidential with with the company and its insurers. But we are aware of what's in the media, that a portion of the settlement included a payment from the directors and officers liability insurers, and I think it was around 70 million euros, which was included as part of the settlement. So to answer the question, yes, although the allegations and sort of the outcome of investigation center around fraud and deliberate misconduct, the policies do respond in the first instance to defense costs and to advanced defense costs for directors who are held responsible until such time as there's a final adjudication in those matters. And then where a company has purchased a side C insurance portion, so in a breach of securities regulation, there is cover under that, again, depending on certain circumstances, but it can respond to the breach of securities regulation for a portion of loss. So yeah, the DNO policies at times can respond to certain aspects of these losses, but just important to understand that we would never, and DNO insurers would never cover the actual fraud. The intention is not to cover fraud, but they do respond to the defense costs upfront until such time as there's that final adjudication. I think that was all on the directors and officers liability insurance. And then I don't know if you saw anything else, Yuri, on the chat. Otherwise, just a lot of good comments on very informative. Thank you for the presentation.
There's one or two questions. One from Mark Dry saying, where does the FSCA figure in all of this? No part of their mandate.
I mean, the FSCA certainly misleading financial accounts are part of their mandate, and they are investigating this now. And there will be another finding released probably within weeks about culpability for that. But certainly they would bear responsibility for this. But they, like everyone else, just missed it. I think it relies upon a series of gatekeepers: the JSE, Surveillance Department, URBA, their auditors, and everyone missed it. It was quite a well-constructed fraud. There was a question as well in the wider group about whistleblowers, talking of that. I mean, nobody at Steinhoff, partly it was well covered because nobody blew the whistle on this. Nobody said that I've seen anything dodgy until it actually collapsed. It was a business partner, who he'd fallen out with, who essentially blew the whistle on this and led to the 2015 investigation in Germany into Steinhoff. But in general, talking about whistleblowers at companies, you look at a case like FIFA, which was this massive scam overseas in Europe, and the guy who wrote about that, BBC journalist Andrew Jennings, says they're always really good people in bad companies. There are good people who will be able to say there's something wrong and they want to talk about it. They want to talk about it, but people often feel fearful that they'll be found out, that they'll be hounded out. But there are avenues to do this. I mean, I think that there are whistleblowers have spoken to the media repeatedly, and it has helped bad things and awful circumstances be exposed. And I think that, media is under no obligation to ever disclose their sources, and they don't do that. But I think it's about, can you live with what's going on at a specific company? Would you want to expose it? And I think it does come out often, and I think it's very useful to society that it does happen. I'm just amazed that at Steinhoff, nobody bothered to do it. Nobody did it. I mean, either they didn't see the full scale of it, and that's perhaps testament to the way in which Marcus Jooste was able to divide everyone up. So you had no holistic picture of the whole. Or there was just immense fear of breaking through the mafia cult of Marcus.
Great, thanks so much, Rob. Shani, I think I spoke over you. I'm not sure whether you had a comment or perhaps a question just before Rob answered the previous question.
No, I don't think so. Yeah. So guys, I think with that, there's 1 or 2 minutes left, but I think we'll leave it there for the questions and answers. And again, Rob, just a big thank you to you for your time and a very interesting presentation. We really appreciate it.
Great,
and
thanks
to all
so
our
much.
brokers on the call, thank you so much for logging in again. And I saw there were 1 or 2 questions around the recording. We do have the session recorded and it'll be posted on our usual spot on the YouTube page.